Is this Bitcoin rally for real? Let's discuss. So hey everyone, welcome back to Upside Down Data. Bitcoin has been going on a bit of a move recently. We obviously had that fake news about an approval of a spot Bitcoin ETF back here on the 16th, which shot the price all the way up above 30,000. We then retraced that as people learned that that was indeed fake, but notably, we did not retrace that move in its entirety. And in fact, we have now been pushing up to try to fill out this wick here. And in fact, earlier today, as I record this on the 20th of October, we actually did push higher than that level. And so there's been some serious bullish momentum in Bitcoin. Really going back here, we started moving up, but really in the last few days, we've been seeing this stronger impulse. Now, one of the things I think is interesting about this move here is that even though Bitcoin's price has been moving up, if we look at something like Bitcoin's funding rate, so this is in the perpetual futures market, there's this thing in that market called the funding rate. And basically what that is it's the rate at which longs or shorts have to pay to be in their position or get paid to be in that position. So a positive funding rate means that there's more longs than shorts. So longs have to pay shorts being in their position. There's a fee that they have to pay, and then vice versa. If shorts are the dominant position, they end up having to pay longs. And so if you're not familiar with the language here, long means you're betting on price to go up, short means you're betting on price to go down. One of the things that was really notable going into the last couple days is look at what the funding rate had been doing over this time. It had actually been quite negative here on the 18th through the 20th through to today. It had been quite negative even as Bitcoin's price was moving up. And what that suggests is that a lot of market participants were disbelieving this push up. They were disbelieving this bullishness. They thought that Bitcoin was going to correct, come back down all the way back before here, something maybe not too dissimilar from what we saw over here with the grayscale ruling when we had this big rally up and then just immediately retraced it. Seems like a lot of people might have been expecting a similar thing to happen. So they're piling in on the short side, expecting price to go down, but instead price has gone up. And if you know anything about the derivatives markets and how short squeezes and things like that work, if people are piling in short and price continues to go up, what will happen is that those shorts get squeezed, they end up having to cover or they get liquidated, which actually adds a lot of forced buying pressure into the market that can catapult price up even further. Now, it's notable that more recently now today, it seems like the funding rate is starting to flip positive. And so it does seem like now we're getting back to a point where people might be now getting more on the long side to a greater degree than the short side, but not to an extreme degree. And it's also important to note that just because the funding rate is starting to flip positive doesn't mean that we have to see a crash in price immediately. You'll note in some of these previous rallies in this year, you'll have a consistent positive funding rate even as price goes up. So it's not a death knell or a thing that price can't continue to go up if you have a positive funding rate. But what can often happen is if you see price going up with a negative funding rate, that can be a setup for there to be short squeezes to really catapult price up further. And so we'll see if that all plays out, if people end up getting squeezed out of their shorts or how much buying might be forced from that. But I thought this was notable and was different from some previous rallies we've seen earlier on in the year, where really we were seeing the funding rate staying positive, not really flipping negative, before price moved up. And so you're less likely to have those extreme squeezes that can really shoot price up to the upside more extremely. So we'll have to see what happens, but I thought that was a notable thing to comment on in more of a short-term factor going on here, where it seems like there's been a lot of disbelief in this rally, and oftentimes that's what you want to see, because then people might continue to throw in short positions thinking that it's going to go down, which just adds more fuel to the fire that can let it move up even further. And so we went up and we actually got above 30,000 today. We'll see if we at where we close today and if we continue to push up back to the highs, going all the way back to the beginning of the year, basically pushing us back up into this range that we had been in before we fell off here in August. So those are some short-term considerations about, can this rally continue? I think certainly it's a positive sign for the rally if people continue to dump in on the short side, and then if price continues to move up as it has been, that can just continue to move price up as well. But if we zoom out and we look at the longer term perspective with Bitcoin where we stand right now, we also see that we're in a pretty reasonable spot right now. So this is our long-term upside downside potential indicator. It's one of our risk models that we have here on the channel. So long-term, it pays attention to the moves that play out over months to multiple months. So it's long-term in its time horizon. And if you're not familiar, higher values indicate higher risk. That's when the upside potential is quite small, downside potential is quite large. And then low values is the opposite. When the downside potential is quite low, upside potential is quite large. And so you'll note it identifies these market cycle tops very nicely. And it also identifies these bottoming points very nicely as well. And what you'll notice more recently is that we've been in a pretty low level of long-term risk according to the model. We dipped all the way back down here in September down to negative 3.5. We're up currently at about negative 2.5, but still in this very low risk range, really consistent with what we've often seen in these low periods as you might be going out of bear markets into new bull markets. And so it doesn't mean that price can't move down, but what just is suggesting is that long term, looking at the longer term, it thinks there's considerably more upside potential for Bitcoin right now than downside potential. So overall, this would be a bullish sign. And still, it can take a while for these kind of things to play out. But certainly, historically speaking, you'd rather be buying Bitcoin at these levels than all the way up here, when, of course, there's all the FOMO, and that's when everyone wants to be buying because everyone's excited and euphoric. That almost always ends up being the worst time. These are the times when the market's boring, when no one cares, when people have left crypto for dead, that the best investment opportunities happen. And obviously, that's not financial advice. You should make of these data as you will, but that's just what I'm looking at, or it's one of the things I think about when I'm looking at these data. Now, another thing we can look at also is our forecast model. So this predicts the probability of upside for Bitcoin 6 months in the future. So how likely is it that Bitcoin's price will be higher than it is right now 6 months in the future? And we've been really coming up through here and then into the beginning of the year in a very bullish footing for the forecast model. It's been up as high as over 90%, down into 80s, into the 70s, but generally speaking, it's very much been on the bullish side. It's been seeing a higher likelihood of us going up than down. It's been well over 50% chance of us being up 6 months in the future for this whole entire time. And so with that kind of footing, that's one of the reasons why I've been generally bullish this entire time, even as people got really bearish through here, and we're saying that we're going to go way lower, especially after here. People said we were going to go down to these levels, we're going to go down to these levels, we're going to go all the way down here, we were even going to go down to 10K. I was not ready to move to that position because the data just weren't supporting it. And one of the things I was looking at was our forecast model. Now, if you want to get live access to our models and more, you can go over to our website, claritydigital.io. Leave a link in the description. And if you sign up for our Clarity Digital Pro service, you can get live access to all of these models and more over there. So that was one of the things that I had been looking at. And so one of the things I want to then wrap up this video talking about is, personally, I like to be data-driven in my outlook. And that's why I've been bullish this whole year, because the data were telling me that that was the position to be, and that was probably the more reasonable place to be than to be bearish going into this time. And the nice thing about a model is it does not care about emotion. It doesn't care about what you think. It's just going to tell you what it sees. It's going to just look at the data and give you its objective evaluation, whether or not you like it or not. And that's one of the reasons why I personally really like having models, because I don't trust my emotions. I don't trust what I want to be true or what I think might happen, because I can be biased by any number of things. Whereas with hard, cold data, you can't argue with it. It's just telling you what it thinks it's going to be, and that's that. It doesn't care about what you think. It doesn't care about how you feel. And so that's one of the big reasons why I like having these models. Another benefit of models is that they don't care about the prevailing narratives at the time. They don't care about what people on YouTube or on X are saying, or the rationale that they're giving for why they're calling for certain prices. It's just looking at the data and telling it as it sees it. And I think this is important because there could be some narratives that are pushed that really just don't have the backing to be taken as particularly seriously, or at least to be looked at with any kind of certainty that they should actually play out in the future. Now, one I actually want to talk about, just as an example of this, is some of the discussion I've heard about the halvings and how Bitcoin is quote unquote supposed to behave before a halving, or in the year before a halving. So different people I've seen talk about this. I think Ben Cowan is the most prominent, but not trying to call him out specifically. Other people talk about this as well. And what they argue, or their thesis, is that in the year before a halving, Bitcoin just won't do much. It will, so for example, here in 2015, it will just range sideways, put in a double bottom, or in 2019, it might go up and then it might go down. And basically the narrative is that Bitcoin might go up in the beginning of the year, but go down in the end of the year before a halving. But there's some issues that I have with this type of narrative. And so one of them is just that the sample size is literally 2. So those putting out that that narrative, they will ignore basically 2011 being the year before the 2012 halving, which is somewhat convenient because, of course, that one is a massive appreciation in Bitcoin price. But we can give that to them because this was probably not very representative of typical cycles. This was right when Bitcoin was just starting. And so there wasn't very much, it was a tiny market cap, could be moved around really easily. So let's just imagine that we really only should be looking at these 2 years. The problem I have is that it's a sample size of 2, and it's not just a sample size of 2, it's a combination of very specific factors. It's saying a year before the Bitcoin halving, and we only have 2 times to look at. Should we really be taking that super seriously? Should we really be worried too much about the particular movements that Bitcoin made in those 2 particular years? Personally, I think that that is dubious to be gentle. If you know anything about statistics, you know that a sample size of 2 is, you can't interpret anything from that. You can't draw any conclusions off of that. And so personally, I think those kind of narratives are not particularly useful. I think that they're things that people like to talk about just to have something to talk about. And there's something that they can use to give people some sense of certainty about what they might expect going forward. But personally, I just don't find them to be very useful. And that's, again, why I like to have these models, because they do not care about those narratives. They don't even care about market cycles. It's a narrative about Bitcoin and crypto that's probably one of the most basic ones that a lot of people have, is that it goes in cycles. That all have these booms and busts that historically have acted every 4 years. These models don't actually care about that. They're not assuming that. They're not dogmatic about there being market cycles. All they're doing, for example, the long-term UPI, is just looking at the current day, looking at the data that it has, and just estimating what is the relative upside versus downside potential. It's not assuming there's going to be another market cycle. It's not assuming anything about that. It's just looking at the data and telling it the way it sees it, same as the forecast model. Now, you'll see the cycles show up in these models, and it should. Obviously, it would be a terrible model if it wasn't calling these topping points as being topping points. But it's not dogmatic about that. It's not assuming that that has to happen. And so even the idea of a market cycle is an assumption that we only have limited data points about. If we go back and we just talk about Bitcoin here, we only have, depending on how you slice it up, 3 or 4 market cycles to show, and yet everyone assumes that that must be the case going on forever. Technically, that's still an assumption, and it's one that we don't have a very large sample size for yet, and so we'll have to wait and see what happens. And that's, again, why I don't like to get too caught up in those narratives. I like to see what the data are saying and follow accordingly. Because what could certainly happen is markets tend to surprise people. And so you could certainly imagine a scenario where the market cycles break. Or certainly you can imagine a scenario where this pre-halving year behaves differently than past pre-halving years. And anyone getting too dogmatic about those narratives is going to be caught very much off guard. And so I think there's risk of getting too dogmatic about those. And I personally don't put a lot of stock in that type of narrative. Now, more power to you if you do. Obviously, this isn't financial advice. You should navigate this as you will. But that's just my own personal view of some of this. I think people get way too caught up in looking at very specific scenarios that happened in the past without really appreciating the fact that the sample size is so small that we really shouldn't be extrapolating anything from that. That was a behavioral pattern, a price behavior that happened at a specific point in time with a specific set of circumstances that's not necessarily representative of what's going on right now, and we should act accordingly. Whereas a model is going to be much better off at evaluating objectively the state of the world right now and what might be a reasonable outlook going forward. So again, not financial advice, but just some things I'm thinking about right now. So overall then, to wrap up, I think this rally could have more legs, as we talked about, looking at some of these data in the derivatives, and also longer term, I think it's still a reasonable outlook to be bullish. And then the final point I just wanted to make is that there's a lot of people out there with a lot of different narratives, and a lot of narratives that might go against what Bitcoin is doing right now, but then people will just say, well, but it happened in the past, so it should happen again. And I just wanted to kind of put a caveat on those, because I think people often get way more dogmatic with those than is maybe warranted. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. And also check out partydigital.io, where you can see live data from our models and more.